Jade Stapleton, and I'm a financial advisor at Superannuation in Australia today. Today I'm going to talk to you about salary sacrifice. A lot of people have heard about salary sacrifice but are unsure about what it is. You can actually put superannuation funds in on top of what your employer does for you. So your employer puts 9% of what your total salary is into superannuation as your superannuation guarantee, which is a legislative thing that the government makes your employer do. This 9% goes in and you get 15% tax on that. If you decided to put some of your salary into superannuation before it was taxed, so for example, you told your employer to salary sacrifice $5,000, they would take $5,000, put it into superannuation before you would tax at your marginal tax rate. So what that means is that $5,000 only has 15% tax when it goes into superannuation, instead of, for example, your 30% tax rate that you pay outside of super. What that means is that you're paying a little bit less tax, depending obviously on your marginal tax rate. It does mean, however, that once you put those funds in, you won't be able to get them back out. The benefits also of having those funds go into super is that the earnings of those superannuation monies, let's say you put it in a term deposit and it was 5% interest and you earned, $2,000 that year, it would only be subject to 15% tax. But if you had that $2,000 earning in your own personal name, you would pay your own marginal tax rate, which means you could be paying 30 cents or more in a dollar on that $2,000. It means that you're saving that 15 or whatever percent. It means that you're saving tax depending on your marginal tax rate. It also means that you're growing your superannuation balance, which means you can then have a better retirement lifestyle. It can also be a way for you to have your insurances inside a super and pay for them. You could be putting in a little bit more of your income into super to pay for those premiums, instead of paying for them outside super. Salary sacrifice limits are up to $25,000 this year, and that includes your employer guarantee of 9%. So if your employer is putting in $10,000, you can only put in $15,000. Otherwise, you get penalised. You can, however, look to put in non-concessional contributions into super. I discussed what non-concessional super contributions are in one of my other blogs. Please have a look for what is non-concessional contributions and have a look at that. If you think you're going to go over your cap, make sure you double check all your superannuation contributions. You don't want to be going over the limit, otherwise you get taxed at a very high tax rate. If you would like some more information on salary sacrifice or non-concessional contributions or other superannuation contributions, please check out my other blogs or give us a call. It's always best to get financial advice when you're looking at doing financial strategies. Thank you.